Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face. And I hope you're catching pips as usual. Pips of Persia here. Today's video seems to be the answer to this never-ending battle amongst all traders about whether or not time and price are even remotely related and if we have to trade during certain hours every single day. So we're going to speak about, does it even matter? Is it the same for all currency pairs? Is there a set time during the day that you have to trade every single currency pair at? Does this apply to precious metals and different indices or different markets that you might trade? How does the news affect the time of day that you want to trade? And what time of day do I actually execute my trades on? Now, mostly today's video is going to be my own views about this topic and speaking about my own views, why price and time is important and why we should indeed be paying some attention to the time of day that you actually execute the trades. Now, before we answer each and every single one of these questions, first we have to have a good understanding about what different sessions during the day actually are, what time of day do different banks actually trade, and if we should be paying it any attention or not. So if you're not certain what I mean when I speak about market sessions, this is where we are speaking about the different banks that are trading in different countries at different times of the day, because as we know, banks are the largest players within the financial markets. So naturally, we want to take advantage of the hours that they are actually executing their trades. So as we know, the European banks are going to be open at a different time compared to the North American banks or compared to the Asian banks. This means throughout the day, there are different banks trading at different times, and we can actually break this down in terms of market sessions. Mostly, you will hear traders speak about the following 4 or 5 major sessions, starting with the London session. London session is where the banks within the United Kingdom and generally the European banks are more active and are executing their trades around the same times. The London session opens at 3 a.m. Eastern Standard Time and it closes at 11 a.m. Eastern Standard Time. This translates to 8 a.m. UK time to around 4 p.m. UK time. Now, some people would say 7 a.m. to 4 p.m., 8 a.m. to 4 p.m., 8 a.m. to 5 p.m. Honestly, this doesn't make a big difference about the information that we're going to be speaking about today, because majorly we want to be targeting the overlaps, which I will speak about a little bit later. Now, the New York session opens at 8 a.m. Eastern Standard Time and it closes at 5 p.m. Eastern Standard Time. That's roughly around 1 p.m. UK time to 10 p.m. UK time. The Sydney session would open at 5 p.m. Eastern Standard Time and close at 2 a.m. Eastern Standard Time. This is around 10 p.m. UK time to 7 a.m. the next day UK time. And Tokyo opens at 7 p.m. Eastern Standard Time and it closes at 4 a.m. Eastern Standard Time, which roughly translates to around 12 a.m. to 9 a.m. UK time. Now, I've also decided to add the equity market or the New York Stock Exchange Open because I want to speak about that a little bit later. The New York Stock Exchange Open or the equity markets open every day at 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time, which translates to 2:30 p.m. UK time to around 9 p.m. UK time. Please do make sure to translate these times to your local time for you to be able to keep on top of different sessions a little bit easier. Now, you can also find pictures for the market sessions on Google. Just double check the numbers, not necessarily with this video, with any other source out there that you'll find, for you to make sure the open and the close time that they have written for each session is the correct open and close times. Now, the London session or the European session is the most dominant session globally. That's the session that a lot more investors would trade during, and that's the session that a lot larger volumes of orders are going to be traded during. I believe more than 40% of all of the volume that's traded every single day happens during the London session. Now, as you can see, some of these sessions actually overlap. The Sydney and Tokyo session are practically overlapping completely. They only have a 2-hour difference in between them, and the London and New York sessions seem to overlap around that 1 p.m. to 4 p.m. UK time, or that 8 a.m. to 11 a.m. Eastern Standard Time. That's the time that both of these sessions are active. Both of the countries' banks are actually actively trading during that time. So you can imagine when multiple sessions are overlapping, there's going to be more volatility in the market that we can take advantage of, and there's more orders naturally being executed. Again, we will speak about that overlap a little bit later, and we'll also relate that overlap to the equity markets overlap, since that is also included during that overlap time. However, generally speaking, in terms of the overlaps, I personally care about the London and New York overlap a lot more than I do compared with Sydney and Tokyo. Although Sydney and Tokyo sessions do overlap as well, the number of orders and the volume of orders executed during London and New York are significantly higher compared to Sydney and Tokyo, which means the markets are naturally going to be moving more during those hours. And for me, being based in the UK, that seems to be the more reasonable time for me to actually want to be executing my own trades. But when we speak about executing different trades at different times of day, does this actually apply to every single currency pair? Take what you see in front of you as a general guideline, not necessarily a rule or a law that must be followed, but generally speaking, during the London session, currency pairs such as the British pound, such as the euro, such as the Swiss franc are going to be more active, as these central banks are going to be trading more. During the New York session, mostly the US dollar is going to be very active. Also, the Canadian dollar is going to be more active, as the banks of these two different countries are going to be actively trading. And during the Asian session, we would expect more volatility on currencies such as Japanese yen, Australian dollar, and New Zealand dollar. Now, this is what I mean when I'm talking about the overlap. As you saw on the slide before, London and New York session have a few hours that they overlap every day, roughly around 1 to 4 p.m. UK time or 8 a.m. to 11 a.m. Eastern Standard Time. So you can imagine during that time that the New York session is active and the London session is active, that is a perfect time for me to be trading currency pairs that include, for example, that US dollar, that euro, that pound factor to it. So it's amazing for us to want to trade the major currency pairs around the London and New York overlap. The reason why the equity open or the New York Stock Exchange open is also important is this seems to be the time currency pairs such as gold or indices, US 30, USD, or whatever other indices or precious metals that you're trading seem to be more active when equity markets open. So it's been some time since I've traded gold, but I remember when I used to trade it a little bit more actively, a lot of the times I was waiting for equity open, so around 2:30 p.m. UK time, I would monitor the chart for about 15 to 30 minutes to see if the trades are coming into fruition, and that was the perfect time for me to want to execute some trades. Even if I was opening trades before that, I would still tend to see the bigger moves take place around that 2:30 p.m. UK time or 9:30 a.m. Eastern Standard Time. Now, this is a phenomenal guideline to follow until you start to think about it a little bit too much. And that's when questions such as, what about AUD USD and GBP NZD and Euro JPY start to come in your head. You'll start to think to yourself, okay, I'm meant to trade Australian dollar during the Asian session. So I cannot be trading AUD USD during the New York session, right? Wrong. Again, this is a general guideline. It's about how you personally interpret it and how you want to apply this to your day-to-day analysis. So for me, generally, anything that has that US dollar or pound or even euro factor to it, I would want to be trading that sometime during the London or New York session. Majority of the times it happens to be around the overlap. And yes, that would include AUD USD, NZD USD, USD JPY, Euro AUD, Euro NZD. It would include all of these currency pairs as well. And I wouldn't just wait for the Asian session to trade, for example, CHF JPY or AUD CAD or GBP NZD. I would take the trade on these currency pairs if it comes to fruition before that as well. For other currency pairs such as AUD JPY, NZD JPY, AUD NZD, I would still be monitoring these currency pairs during the London and New York session. However, sometimes the more major moves for these specific currency pairs take place during the Asian session. I haven't traded these currency pairs in a long time, to be honest with you, because I don't normally stay up to monitor them, and I would rather focus on the currency pairs that would give me the biggest moves during the times that I can actively monitor them. For the people who trade Euro USD or GBP USD, you would agree with me when I say during the London and New York overlap, majority of your trades tend to come to fruition. So we do trade currency pairs such as AUD USD, GBP NZD, Euro JPY outside of both of these sessions if need be, but majority of my trades still do happen to be around that time. What if we can only trade Asian session? For some people, they may be at work during London, New York session. By the time they get home, maybe London is going to close or New York might be closed by then. So the only option that they have to actively trade would be the Asian session. That's absolutely fine. You have now found a session that agrees with your day-to-day routine. It's just about selecting the right currency pairs to trade around that time. So my recommendation for those of you who can only trade during the Asian session is monitor pairs such as AUD/JPY, NZD/JPY, AUD/NZD. Monitor these currency pairs a little bit more, but still give yourself room to trade other currency pairs as well. Now, when I say I trade during the London and New York overlap, that doesn't necessarily mean I'm going to be monitoring the currency pairs that I have analyzed every single minute of that overlap or every single minute of that session. This really does depend on your day-to-day routine, but majority of the times for myself, whenever I wake up in the morning, which is roughly just before London Open, I quickly analyze my charts. I have a look at the currency pairs that I have been looking at for the past few days or maybe past couple of weeks. I would see where they are standing, if it's close to my points of interest or not, and if the trade is getting ready for execution, that's when I would monitor it. If not, normally during the mornings, I simply set my alerts. So maybe I'm expecting Euro USD to come up higher before dropping. Instead of me executing a sell limit there and then, I simply set an alert on my trading view and wait for the alert to go off. Once my alert goes off, I'll open my laptop, I'll monitor it again, and if need be, I would keep monitoring it until I execute it, or I'll continue to set alerts until it approaches my entry point. So I would never find myself monitoring a currency pair or different trades for the entire session. I simply find myself monitoring it during that time, at different times during the overlap, setting alerts for myself, and whenever it's ready, execute the trade. More than the time of day, I would want to trust the technicals behind that specific currency pair. The time of day that I'm always careful executing trades, however, is the daily close or the daily open, whatever you want to call it. That happens at 5 p.m. Eastern Standard Time or 10 p.m. UK time. That's when the previous day's candle closes and a new daily candle starts. Normally around these times, for about half an hour to 1 hour, you would experience high spreads, which would make your risk to rewards worse and would make trade execution a little bit more challenging. Now, I've been waiting to speak about this one point, getting used to a few currency pairs. Is it a good idea to only monitor 1 or 2 or 3 currency pairs and get used to them? Or is it a better idea to look at many different charts and many different currency pairs? There is no set answer to that question. It really does depend where in your journey you are. Because when I was trying to get my eyes used to these concepts, when I was trying to learn more and perfect my trading, I would look at any and every currency pair. Why? Because I was forward testing, not back testing. I was analyzing them live, saving them and coming back to them. And by me looking at different currency pairs, looking at different time frames, I was getting more data to analyze. So if you're just about starting off, there's no point wanting to master one currency pair right now, in my opinion at least. So start off by looking at different currency pairs, but when you want to take your trading to the next level, it would make sense to focus on a small number of currency pairs, because that's when you will learn the behavior for those few currency pairs. So we have a lot of people who only trade Euro USD, GBP USD, US 30, a mixture of these 3 currency pairs or these 3 asset classes. Although you might think that some days there wouldn't be any trades executed, for these individuals, because they have been looking at these currency pairs for so long, right now they have gotten used to the time of day that these currency pairs seem to be more active in. So they know when to monitor those currency pairs. They don't have to sit behind their charts all the time. They know when to expect the bigger moves to take place as well. So that's the major advantage of focusing on only 2 or 3 currency pairs, because not only you will get used to their behavior, you will also get used to what time of day they tend to be more active at, which is exactly the time of day that you need to be monitoring those currency pairs. Another important thing is also the news that happens during these different sessions. Different times that there are different speeches happening which can affect that one given currency. Most of the times I'm actually plugging into the speech live and listening to it, because all of these would give me ideas of what to expect, whether I'm expecting a big move or not, whether the news that has come out seems to be more hawkish or more dovish. Conversation for another day. So although I don't trade based on fundamentals, I do pay attention to them, but most of the times I'm just keeping myself safe against it and generally just following up with how an economy is doing. How are they dealing with unemployment? Now, the final point, and probably the most important point of them all, do not expect everything to be perfect. Just because you have seen a reaction on a currency pair 3 days in a row at a specific time during the day doesn't necessarily mean that's going to dictate for every single day of every single trading week to come. So yes, we expect Euro USD to move a lot more during the London and New York overlap. Does that happen every single day? Of course not. There will be times that Euro USD might move more during the Asian session. So it's not going to be perfect, but all of these factors are going to be factors that increase our probability of winning, and not just winning, but winning long term in these markets. It's a game of chess. Whatever move you make from practicing and studying to actually trade execution, every single one of these moves should be calculated, and all you can do is increase the probability of you winning more and more and more. Protect yourself, have smaller losses and bigger wins, and this would add to a higher probability of you being successful in these markets over the long period of time. So get the myth out of your head, expecting everything to be perfect. Instead of that, look for factors that are going to add towards the probability of you winning consistently for weeks, months, years to come. So to quickly wrap it up, we spoke about the different market sessions: London session, New York session, Sydney and Tokyo session, and the New York Stock Exchange. We spoke about what time of day these sessions open, close. We spoke about the general guidelines in terms of which currencies to focus on during which sessions, and whether or not we would only trade that currency during that session, or whether we would, for example, trade Euro during the Asian session as well. We had a brief conversation about whether or not you would monitor your charts and your analysis throughout that entire session, and finally about how I would be monitoring my currency pairs, about how I pay attention to time and price relationships, and how I would also keep on top of the news as well. So with that being said, the final verdict of whether or not time and price relationships actually matter, for me they do. For me that's something that I pay attention to, but it's not a necessary factor for trade execution anymore. Most definitely I would be more careful taking trades that are outside of this session. Most definitely I would be more comfortable trading the currency pairs during the correct session. So what I would recommend everyone to do is from now on just pay attention to what currency pair you're trading and what time of day you are trading that currency pair. For those of you who are being more organized with your trades, start to take notes of the exact time of day that you execute what currency pair and come back to it in a month or two. You will be left with a lot of data for you to see whether this agrees with you or not. But with that being said, I hope you gained value from this video. If you did, make sure to press the like button down below and definitely subscribe if you are new. Don't forget to turn on the post notifications down below as well. Be the first person who watches the videos that I'm about to post in the next few weeks to come. I look forward to seeing each and every single one of you achieve your trading goals and dreams and catch these 1 to 100s. But with that being said, let's elevate and let's catch some pips.